Hi, my name is Kevin Retcher, owner of First Meridian Mortgage. I have 28 years of experience in the mortgage industry, and I have never missed a closing date on a purchase. So I feel that I'm uniquely qualified to talk to you about the loan mortgage process. If you're about to start the home buying journey, the mortgage loan process might feel just a little bit overwhelming. But don't worry, we've got you covered here in today's video. We're going to break down some steps in the mortgage process, things that you can expect, things that you might not have thought about that probably you should expect. Okay, first, finding a lender. That's probably the toughest part. Shopping all your friends, family, realtor recommendations. How do you know exactly which loan officer to use? First and foremost, you want to give them all the same scenario. Give them, I want to buy a house with 600,000, 20% down, 600 credit score, 30-day lock. Give them all the same scenario to work on and have them give you a loan estimate so that you can compare all their offers on the same day. Get comfortable with their fees. Ask them about how they conduct their service, how available they are, and how they communicate, especially with you and your realtor. Okay, taking the time to find a lender makes, in finding the right lender makes your life a lot easier. So step one, take your time. Don't rush into that. When you're talking to them in step two, you should be going over the different types of programs potentially that you're looking at. Conventional loans, FHA, VA. Lenders should help you understand the differences, the exact closing cost, the exact down payment that you need, and give you those recommendations. Step three, once you're comfortable with whom you're going to use, you should have two selected. Make loan application with your number one. Make sure you let him pull your credit. Make sure you ask him your 3 credit scores. You should know what those are so that you can tell lender number 2 exactly what your scores are. Make sure you provide all your documentation requested, income, asset, employment, if you're divorced, if you're PCSing, if you have orders, if you have any mortgages, mortgage statements, every piece of document that he asks for or she asks for, make sure you provide. Here's the thing. Don't get mad. When we go into underwriting, we actually have to have the most current 30-day pay stub and most current 60 days worth of asset statements. So if it takes a couple months to actually find the right house, you're going to have to update and keep some of this paperwork updated. Put it all in one file. That way, if you give it to lender A, but you switch to lender B, it's just sending them exactly what you sent lender A. Should be the same stuff, okay? So now that you've had your credit pulled and you've provided all your documentation, you should be getting a pre-qualification or a pre-approval. It's going to be different based upon the person that's doing the actual work for you and the type of lender that they are. I'm a mortgage broker. I can only write a pre-qualification letter unless I've sent it to a lender. Then I can write a pre-approval. So I have the option to do both. You want to look and ask what exactly has been done. Have you pulled my credit? Have you provided all the documentation? If you haven't provided any documentation, you're probably not really pre-approved. Okay, lenders and correspondent lenders can write the words approval just because they are lenders. Okay, and so they may not have done as much work as a mortgage broker, but they can still say approval versus pre-qual. So in a lot of cases, a pre-approval and a pre-qual are the same. Just depends on how much work has actually been done. Okay. So once you get that pre-approval or pre-qualification, it makes you a much stronger buyer when you go into the negotiation process. Okay. In that negotiation process, once you win a contract, Here's the thing. The good and the bad news is step 5, your loan process actually starts at that point. We've done all that pre-work, but we needed that address and that contract to actually get your loan into underwriting and start the loan process. So we're going to order the appraisal. We're going to order your title work. You should do the home insurance ordering immediately. Home insurance is a big thing now. It can actually make or break a deal. You want to know if that insurance cost is a lot higher while you still have contingencies to get out of a contract potentially versus waiting. We think that your insurance is $100 a month and it turns out to be $400 a month. That could be enough to make your deal not qualify. Okay, so the goal here is to get you in underwriting as quickly as possible, get everything ordered, appraisal, title work, insurance, get that done. The underwriter is going to underwrite your loan typically within 24, 48 hours, sometimes as short as 3 hours. They're going to give us a list of conditions. So your loan will be approved with conditions. We dot those I's and T's, we get those items, and you should end up having full loan approval. And once the underwriter's done with everything and he's checked everything out, he's going to give you what's called a clear to close. Step 6 and 7 is when you have that clear to close. That kind of opens up the portal for the lender and the title company to actually start communicating and balancing out all the fees that are being charged, both the seller and you. Collect any of your receipts for items that you've already paid. If items still need to be paid, make sure that those get put on the closing disclosure, and you're going to get final numbers for your closing. Keep in mind you're going to have to make sure you have proper instructions on how to bring additional money to the table, whether or not you're wiring, and you're going to speak to the title company on those merits accordingly. Keep in mind, prior to closing, they're going to do a last-minute verification of employment and a soft pull, bringing down any credit checks to make sure you haven't increased your debts or changed your credit profile. So when a loan officer tells you you're clear to close, don't go out and think you're done. Don't quit your job. Don't do any new credit inquiries. Don't go buy new items. Sometimes you have to have a credit inquiry for the utilities, and that's easily explained. Just don't increase any of your debt. Okay, so at closing, you're going to go sign, anywhere from 8 papers to 60 papers. You're pretty much not going to be able to change any of that stuff. Make sure your name's appropriate on the deed. Make sure that you bring a checkbook for just in case you want to set up electronic payments if the lender offers you to do that. Make sure you know where your first payment coupon or letter is so that you know how to make your first payment. That's the most important thing. Never leave the closing table without knowing when your first payment is due and how to make it. At that point, you should get the keys, and congratulations, you're new homeowner. But that's kind of the loan process broken down in a very fast manner. If you have any individual questions, give me a call. My name is Kevin Retcher, owner of First Meridian Mortgage. I'll be happy to discuss any one of the steps. There is a bit more to each and every one of them, but that is a quick rundown. Again, my name is Kevin Retcher, 703-799-5626. Like, share, and subscribe. Hit the bell. Get notified for any other tips on home buying. And again, we're happy to serve. To all the Marines out there, Semper Fi, happy house hunting.